G'day folks, welcome back to another episode of Bitcoin and Ripple. There's downside risk on the charts which are showing up. We're going to include some back testing, so don't forget to hit that like and subscribe button to support the channel. Before we get into the analysis, if you have questions around these daily videos, then reference the +1 videos, which help break down the daily videos into simpler language. As of today, July 5th, Bitcoin is trading around $108,000, buoyed by strong institutional inflows into spot ETFs, a favourable US regulatory environment under President Trump, and macroeconomic tailwinds such as anticipated interest rate cuts. Analysts suggest that if Bitcoin surpasses 114,000 resistance level, it could rally towards 143,000, with some projections reaching as high as 200 by the end of the year. Ripple's XRP, currently priced near 222, is gaining momentum amid resolution of its legal battle with the SEC and growing speculation about a potential XRP ETF. On-chain data indicates significant accumulation by short-term holders, and technical indicators point to a possible breakout if XRP maintains support above 225. Analysts forecast that XRP could reach between $3 and $10 in 2025, contingent on favourable regulatory developments and ETF approvals. So we always look at the long-term trends first, the monthly, the weekly and the daily. So even though the daily seems to be a fresh breakout to the upside above the moving averages, we look at the long-term trends and notice we've got this bearish divergence on the monthly with lower highs on the CCI versus higher highs in the price, even though that monthly still seems to be just hitting that key resistance area. That resistance is 111,978. Now, the CCI again is broken into a bit of a downtrend, and I've got also drawn these, if I zoom in, this fair value gap, and that is very likely to be penetrated or covered in the coming days or even months or weeks. So keep an eye on that. This one back here has been penetrated already through the subsequent candles here, and there's a little small one there that hasn't been touched yet. This one also has been filled, and the way you measure these fair value gaps, by the way, let's do it on this one. You take this candle, and when the candle after it closes, you take the low of that candle to the high of the candle preceding this main one. And that's where that blue area called the fair value gap is showing. And that's basically unfilled orders during that, in that month when the candle spiked up during that period. Now, as you can see, during that period, those subsequent candles have come back and filled that area, and they've done so in all those instances. There is one down here though, which hasn't been touched yet, and that could be a long-term threat. I've marked it there, so I'll keep an eye on it and see how we go in the coming. This could take years to play out, so I don't go placing short orders on that. I'm just giving you the idea that it could actually break down into that area sometime in the next few years. Back here, we've got another, on the weekly, we've had another bearish divergence, and you can see there I've drawn a target for it. It hasn't quite reached it. The wick of that candle came close to it and bounced, but I'm still going to maintain as a bearish divergence because that trajectory of that CCI is still on a bit of a downtrend. And I've also highlighted here in red that fair value gap which hasn't been touched yet on the weekly. So again, that'll coincide with this bearish divergence. These ones back here, these fair value gaps back here have been penetrated with the action of those candles. There's one little one down there as well which hasn't been touched. On the daily, again, it's coming near that, hitting that resistance at 111,978, not quite high yet. If that goes much higher than that previous high there, I'm going to mark this as a bearish divergence. You can see the CCI is declining. So, and that is also showing some decline there at the moment, although it's consolidating. I'd call it more of a consolidation on both the price and the CCI. So even though it's broken above the moving averages, it's more of a consolidation. Now if we go to the intraday chart, look at closely. So we always look at the smaller range charts to see if there's any micro movements. So again, there's no divergence currently on the daily, but on the hourly, we've had this bearish divergence on the CCI versus the price, and you can see there it's already broken down. Now if I was to draw a Fibonacci on that, going from that high to that low, you can see there it's coming just almost towards that 61% range. Now if this falls much further, we expect it to fall into this red area, which is another fair value gap on the hourly. If I get rid of that Fibonacci for a moment, you can see there's been a few fair value gaps across that period there. All of these from there up have been penetrated by the action of these candles. These ones have yet to be penetrated, so that's why I've marked that as a red. So we may see that break into that point in some stage in the next few hours, possibly when the market opens. Now, if we look at the the back testing as well. I've got the stop loss approach here and the average down approach. And I've started it here from around about the 28th of May. That's where here on the daily, where the CCI broke below the moving average, and so did the price. So in that consolidation period, that's where these two strategies have played out. Now, you would have taken short entries when the CCI and the price break below the moving averages, and you would have averaged down, taken profit at 0.03%, and averaged down when it drops by at least 0.05%. Or for the stop loss strategy, stop it when it drops by more than 0.05%. Now, if you let it run through the whole period, and I'm not suggesting you do that, the stop loss approach is down about $2,500, whereas the average down approach is up about $68,800. Now, the reason for that is you've multiplied your positions when you average down. And again, I'm not suggesting you let it run through the whole period, because you can see there was quite a big drawdown. And if I measured that from that high to that low there, that was about $76,000 drawdown. So you don't want to be impacted by that. The way you handle that is if you're going short during this period, let me just zoom in on here for a moment. If you're going short during this period, you pay attention to any divergence. You can see there's a bullish divergence there on the CCI versus lower lows on the price. And as soon as that breaks above that moving average band on the price, you close out your positions. Now, in that stage on the average down approach, you would have been up approximately 8,900 in those few days of trade. Avoid going short during that period, obviously, when the price and the CCI is rising, and take short positions again when the CCI and the price start dropping in tangent. Now, there would have been a false break there, but there was no divergence to talk about. So possibly you could have entered one contract there and close it out with a small loss, or if you let it go, and I'm not suggesting you do that, add another contract when it starts breaking down more convincingly here. Now, again, that was a drawdown. You would have avoided, if you're holding on to it at that point at the very latest, you would have closed out when the price broke about the average there, so you would have got out somewhere in that point there. So again, only taking, if you're going short in this case, only taking short entries according to the CCI and the moving average of the price bands. So for Ripple on the monthly, that's still up in that range, still consolidating. There's no CCI for it, but it's showing somewhat a consolidation bullish momentum at the moment. On the weekly likewise, although it's finally broken below that moving average range, you can see there on a CCI as well, it's been a bit of a downtrend on that CCI, so potential downside to be cautious of. On the daily, it's broken above both the price and the CCI moving averages, giving us a bullish momentum after sort of seesawing above the moving averages during the last few months. So giving a few opportunities to go long or short or accumulate. But at the moment, I'd be sort of waiting for a little more stronger move to the upside, especially above this previous resistance to be more bullish. And if I go to the intraday chart, you'll notice here we take only trades in the direction of the higher time frame. So if you're trading on the hourly, taking long trades only in accordance with this daily move above the moving averages. And the last positive trades you would have had were approximately around this area here. You could have got into the trade at this point back here when the CCI and the price broke above the moving averages, and you would have closed it out when the CCI broke into that moving average range, and you would have got out on that candle there. So that would have been a nice little trade. Another trade here, and you would have got in on that candle there. If you're following the average down approach, you would have then accumulated and add another position at that point there. Or if you wanted to close it out with a small loss and then re-enter it at that point, and then wait for it to break into the CCI at that point there, and you would have got out on that candle there near the top there. That would have been a nice little trade. Another entry there, enter there, and you would have got out on that candle, that red candle there near the top there again. So a few points gain there. So again, it's going long only during the daily. Don't take short trades. Don't take long trades only. And at the moment, the hourly is showing bearish momentum on both the CCI and the price. If you're new to trading, we're now including a video series, Pete's Investing Plus One, as part of the Pete's Investing channel. The Plus One videos are a dumbed down version of our strategies and give you a better insight into our analysis and help you follow our daily videos. If you enjoy the content, subscribe at least on a free trial to my Patreon page, where I publish weekly bullish shares across various regions of the world's markets. Thanks, and talk to you in our next video.